Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NEOGEN CORP quarterly report. NEOGEN Corporation offers a diverse range of products and services for food and animal safety. The company's business segments include food safety, diagnostic test kits, software systems, natural toxin tests, rapid sanitation tests, culture and prepared media products, filter tests, sample collection products, and laboratory services. Animal safety, reagents and test kits, veterinary instruments and disposables, animal care products, rodent and insect control products, disinfectants, and genomic services. The company's products are sold to various markets, including food manufacturers, healthcare providers, veterinarians, livestock producers, retailers, breeding companies, diagnostic labs, universities, distributors, and government agencies. NEOGEN Corp stock price crash. A year of unfavorable news. The past year has been a tumultuous one for NEOGEN Corporation's stock price, plummeting over 50% due to a series of unfavorable news and financial disclosures. The decline can be attributed to several key events, including a $461 million non-cash goodwill impairment charge related to the $3 million acquisition in January 2025. This was followed by reduced revenue and EBITDA guidance, material weaknesses in internal control over financial reporting, and integration issues. The company's quarterly revenue decreased by 3.4% in April 2025, leading to a further reduction in FY25 revenue and EBITDA outlook. The anticipated drop in EBITDA margins from 22% to the high teens due to elevated inventory write-offs also contributed to the stock price crash. Additionally, macroeconomic challenges such as global inflationary pressures, rising raw material and labor costs, increased freight charges, and rising interest rates have negatively impacted NEOGEN's international business and financial operations. Intense competition has further added to the downward pressure on the stock. The combination of these factors, including misrepresentations regarding the smooth integration of the $3 million food safety acquisition, has led to a significant decline in NEOGEN Corp's stock price over the past year. The primary drivers of revenue growth or decline in the company's financial performance can be attributed to several key factors. On the growth side, organic growth and acquisitions have contributed significantly, with a 7% increase in net sales. Additionally, higher sales of insect control products and genomic services, as well as continued strength in pathogen detection product lines and sample collection products, have driven revenue growth. On the decline side, production inefficiencies, economic policy shifts towards increasing tariffs, lower food production due to inflation, and cyclical lows in animal safety end markets have all contributed to a decline in revenue. Furthermore, restructuring actions in the genomics business have led to voluntary revenue attrition. The company's product portfolio has also been impacted by divestitures, such as the cleaners and disinfectants business, which resulted in a $5.9 million decrease in revenue. Overall, the company's revenue growth and decline can be attributed to a combination of internal factors, such as production inefficiencies and restructuring actions, as well as external factors, including economic policy shifts and market trends. Net income and profit margins. A shift in fortune. The company's net income has undergone a significant transformation, shifting from a loss of $12.6 million to a gain of $36.3 million. This change is attributed to various factors, including changes in operating assets and liabilities, depreciation and amortization, share-based compensation, and the gain on sale of business. However, profit margins have taken a hit. Gross profit margin decreased from 48.2% to 45.1%, while operating income margin plummeted from 4.7% to -7.7%. The decline in gross profit margin is largely due to a decrease in sales volume and higher tariff costs, as well as inventory write-offs. On the other hand, the divestiture of the cleaners and disinfectants business and production inefficiencies have also contributed to the decline in operating income margin. Nevertheless, favorable product mix and lower costs from restructuring actions in the genomics business have provided some respite. The company's financial performance indicates a strong ability to generate cash from its operations. The operating cash flow has been consistently positive, with a notable increase of $10,853 in 2025 and a total net cash provided by operating activities of $97,725. These figures demonstrate the company's efficiency in managing its resources and generating sufficient cash to support its business operations. The company's debt level has undergone some changes over the past year. While the current portion of debt decreased significantly from $19,301 to $0, the non-current debt increased slightly from $874,810 to $792,530. Additionally, the company repaid $51,500 of principal on its revolving facility and made prepayments of $45,000 on its term loan. In terms of interest expenses, there has been a notable decrease. The total interest expense decreased by $2,173,000 in 2025 compared to 2024, and as a percentage of total revenues, it decreased from 8.6% to 7.9%. However, the interest expense accrual only decreased by $90, indicating that the overall reduction in interest expenses is largely due to other factors. The company's financial performance varied across different segments and regions. Notably, the food safety segment saw a significant decline in operating income, dropping from $17,905 to $7,091. The corporate and eliminations segment also underperformed, with an increased operating loss of $27,654. On the other hand, the animal safety segment showed improvement, with its operating income rising from $2,589 to $4,472. In terms of regions, both domestic and international segments experienced revenue declines, with domestic's revenue falling from $104,383 to $102,074, and international's revenue decreasing from $112,581 to $107,115. Management's outlook on company strategy. The company is anticipating a relatively stable outlook despite ongoing challenges. The adoption of new accounting guidance is expected to have minimal impact, while revenue recognition has decreased slightly in certain product categories. However, management remains optimistic about future growth potential in the animal safety segment. To address production inefficiencies and improve operational efficiency, the company plans to invest $50 million in capital expenditures for fiscal 2026. Additionally, an organizational restructuring will reduce approximately 10% of headcount to enhance financial performance. Management expects to fund business operations through cash flows from operations, cash on hand, and borrowing capacity, while also repaying debt obligations and constructing new manufacturing facilities. Overall, the company is positioning itself for future growth and operational efficiency improvements. Concerns about inventory buildup and supply chain disruption are valid based on recent data. Inventory levels have increased by $2,937, driven by higher raw materials, work in process, and finished goods stockpiles. This surge is partly attributed to lower sales volume and channel rebalancing due to switching distributors. Supply chain disruptions also pose a threat, with shipment delays resulting from the implementation of a new enterprise resource planning system and exit from transition service agreements with 3 million. Tariffs have further contributed to decreased gross margin, particularly in the animal safety segment, where veterinary instrument sales have been impacted. That concludes the financial summary for NEOGEN CORP. Feel free to comment below, and I will be happy to answer them when possible.